A former OpenAI researcher just revealed numbers that break everything we thought we knew. Dario Amodei just dropped a bomb on the AI world. And it's the kind of revelation that forces you to completely recalibrate how you're thinking about the competitive landscape. The Anthropic CEO announced that his company has hit a $30 billion annual revenue run rate. Let that sink in for a moment. This is a company that was founded in 2021. We're talking about less than 4 years of existence and already operating at a scale that would place Anthropic among the top software companies in the world by revenue. The context here matters enormously. Amodei is not some hype-driven startup founder known for embellishing his company's achievements. He's a former VP of research at OpenAI with a PhD in computational neuroscience from Princeton. This is someone who built his reputation on precision and restraint, especially when it comes to public statements about Anthropic's financials. The company has historically been incredibly secretive about its business metrics. For Amodei to volunteer this number publicly at a conference suggests he felt the figure was significant enough to break that pattern of silence. What makes this even more striking is the growth trajectory he mentioned alongside it, an 80x increase. We don't have perfect visibility into the timeline or baseline here, but the implication is clear. Anthropic has experienced explosive acceleration in demand for its Claude AI products. This isn't gradual market adoption. This is the kind of hockey stick growth curve that venture capitalists dream about. This announcement fundamentally reshapes our understanding of the commercial viability of frontier AI models. For the past couple of years, there's been a persistent question hanging over the industry. Can companies actually make money from large language models at scale? OpenAI has been secretive about its financials too, though various reports have suggested they're generating significant revenue. But Anthropic's $30 billion run rate is the first explicit, credible confirmation from a major player that the economics actually work. The implications extend far beyond Anthropic itself. If a company built around a single product line, Claude, their conversational AI, can scale to $30 billion in revenue, it validates the entire premise that has attracted hundreds of billions in venture capital into the AI sector. It suggests that the AI arms race isn't just about capability and safety, it's about genuine, massive commercial opportunity. Companies, enterprises, and governments are willing to pay serious money for access to frontier AI capabilities. This also matters for the competitive dynamics in the industry. OpenAI remains the market leader, but Anthropic has positioned itself as the credible alternative. The company has differentiated itself on a focus on safety and interpretability while still delivering competitive product performance. Now, with these revenue numbers, they're not just philosophically differentiated, they're financially competitive. That changes how enterprise customers evaluate their options and how investors think about capital allocation across the AI stack. The most immediate impact lands on OpenAI and Google. OpenAI likely sees Anthropic as the primary threat to its market leadership. And these numbers demonstrate that threat is material and real. Google, which has invested billions into Anthropic, now has concrete validation that its bet on diversified AI strategy, supporting both its own Gemini models and Anthropic's Claude, was strategically sound. This success will likely intensify Google's commitment to the relationship. Enterprise customers need to pay attention here too. The fact that Anthropic is generating $30 billion in revenue means the company is financially sustainable and serious about long-term product development and customer support. This changes the risk calculus for large organizations, considering whether to bet their operations on Claude versus other AI platforms. Developers and startups building on top of AI APIs are affected as well. Anthropic's growth suggests that developers are increasingly choosing Claude for their applications. If you're building an AI-powered product, you need to understand that your choice of underlying model provider isn't just a technical decision anymore. It's a bet on which company will dominate the market and continue investing in product improvement. Expect aggressive competition and matching announcements. If OpenAI hasn't already disclosed its revenue run rate, this announcement from Amodei creates pressure for them to do so. The same goes for other frontier labs. The era of strategic financial silence may be ending. Second, watch for increased consolidation and partnership announcements. Anthropic's success will attract more capital, more partnerships with major enterprises, and potentially more acquisition interest from tech giants. The company is no longer a promising startup. It's a significant economic force that can't be ignored. Third, anticipate regulatory scrutiny shifting. When companies are generating $30 billion in annual revenue from AI products, governments and regulatory bodies start paying closer attention. The question of how these systems should be governed becomes less theoretical and more urgent when the commercial stakes are this high. A company that didn't exist 5 years ago is now generating revenue at a $30 billion annual rate. That's not just impressive, it's a fundamental validation of the commercial AI thesis and a clear signal that the AI revolution isn't hypothetical anymore. It's happening, it's profitable, and it's reshaping the technology industry in real time. Follow for daily AI and business updates.